What is going on, investors? Hopefully, guys are doing well out there. It is Friday. I know I always say this. It is finally Friday. But after you had DeepSeek, after you had earnings from Meta, from Tesla, from Microsoft, from Apple, it definitely feels like a Friday. And we're going to be talking about all those things on today's show. We'll also give you a preview of both Amazon and Google. They report earnings next week. We'll talk about DeepSeek. We'll talk about how we had you covered over on the Equity Empire channel. Posted a video on Saturday, which dissected everything you needed to know. Gave you a longer form video on Sunday, which again, highlighted a lot of things people came to a realization later. We had an article or a newsletter. If you're not subscribed to the newsletter, sent out a newsletter on Monday. This thing went like viral, I guess. We'll put that in air quotes. Not like Mr. Beast viral, but for a financial newsletter, this went viral. This had like 50 or 60,000 reads, which is like 10x normally what we do. And then all of it led to David Sachs telling you today, literally what we told you a week prior. So we're keeping you up to speed over here on the investor channel over at Equity Empire. I want you to stay ahead. That is the goal. I want you to make money, and we better get things started like we always do with Meta Platforms. Start of the week at 632. This one skyrocketed up 9%, blasted to a new 52-week high. Didn't close there, but we were up 9% on Meta Platform. Finished the week at 689. The company reported their earnings, $48 billion worth of revenue, 20% growth rate. We'll give you a preview of Google. I think they're anticipating about 10% growth over there. Still, it's just amazing the growth rate that Meta is able to expand. It's not like they did an acquisition, not like they did anything. Monthly active users, or daily active users, however they tend to measure that thing, it increased a little bit. I don't know anybody that's on I'm not on Facebook. They actually deactivated my account. I hadn't logged in so long, but they continue to bump up that ad load. I'm using Instagram a little bit more. I continue to see ads that I want to click on a lot. And so that's obviously good for Meta Platforms. I did a full breakdown of the company's earnings. If you want to watch that, it's here on the channel. I won't get too deep into the weeds, but things are good. Now, the chief technical officer of Meta Platforms said that their Reality Labs business, which is continuing to lose money, didn't have strong growth year over year, but they said, look, they had sales and user targets that beat where they were in 2024. So they were relatively modest, but the company says that they beat that. Now, I've been critical of Meta. I think I even called for Mark Zuckerberg to get fired over the Reality Labs business. Now, they've kind of pivoted that over into AI. Now, some of the products, we are still probably a year or two away for the company actually generating a product for the mass market. It'd be a pair of eyeglasses, maybe a watch. Some people are rumoring those this year. We'll see what Meta is able to deliver. It could eventually deliver. We'll see. But things are moving, I guess, in the right direction there. Now, they're offering creators deals to promote their Instagram on other apps. Meta is not sitting around. You've still got the turmoil with TikTok. We'll talk about that when we get to Microsoft and maybe a potential buyout there, including Microsoft. And look, Meta is not sitting around. They're offering creators over on TikTok to come to Instagram and different types of deals. They're being very aggressive there. They're also weighing a move out of Delaware. Well, a lot of these corporations are incorporated to potentially Texas or elsewhere, although I think Texas is in the lead there. Texas is drawing a lot of investment. Now, they're not going to move, or at least in the shorter term, they're not going to move their headquarters there. This is just an incorporation. Most corporations are incorporated in Delaware. For whatever reason, Delaware is, it's not for whatever reason, but Delaware is doing some weird things. Obviously, the Elon Musk compensation case has a lot of executives very weary of what's going on, at least from a legal perspective in Delaware. If you can have your compensation package that was voted on by shareholders clawed back, that scares the executives, okay? And so they're going to go to Texas or run to some of these other places, but they're not going to move the headquarters. Those appear to be firm here in California. Now, moving over to Apple, also reported their earnings. Started the week at 225. This one up over 4%, finished the week at around number 236. The company reported their Q1 earnings. Revenue blasted off to $124 billion. That beat expectations, but it's just about 4% growth rate on this one. You don't have a gigantic multiple. It's been cheaper in the past for Apple. Trading at about 32 times. Of subsequent quarters, it is a little bit of a question mark. They got some good data, though, from the Chinese smartphone market in Q4 as they took the top spot there. When we looked at the financials over at Apple in their Q1, China had a big miss in terms of revenue. In fact, it was the only region that actually declined year over year on that revenue side. So could they have a bounce back when it comes to China and their market share there? Company led the list of market share in the fourth quarter at 17.4 versus 20% in the fourth quarter of 2023. Chinese, though, companies continuing to grab market shares. They have a slightly more innovative design factor. And I think there could, this is just an American's perspective, certainly with all the DeepSeek, comments on my videos, I'm just a dumb American, jealous American. But I think there could be some nationalism. Just Chinese people want to support a company that is based there. I also think those companies can meet the needs better than an Apple that is trying to be a global company. This is something to monitor going forward. Very interesting as well. You have T-Mobile that has partnered with SpaceX to offer kind of what's called direct to cell coverage. So you have a cell phone and you're out in the wilderness or there's no cell service. Apple has a feature on some of their newer phones, put that in air quotes. I think mine has this feature because I've been out in my cabin where there's no cell service, but you're able to point it to the sky and connect to a satellite, and you're able to, I think, make text messages, maybe a call as well. Well, Starlink has much broader coverage than what Apple was using, a company I think called GSAT or Global Satellite, and they're a small company. Starlink has this end-to-end almost in the United States, and so now if you're on T-Mobile and you lack cell coverage or it's spotty or whatever, you're going to be able to do text messages and I think eventually phone calls from that. And it's better than what is currently offered just through Apple and their GSAT coverage. So Apple picking that up, and that's probably an extra little revenue source for Starlink. I tell you what, once Starlink goes public, that thing's probably going to be worth quite a bit. That'll usher in a very nice IPO market. Side tangent we probably don't need to go down. Now, company is canceling a Mac connected, that'd be Macintosh computer connected augmented reality glasses. So the rumor is Apple has been working on a set of smart glasses, not the big Vision Pro that didn't sell and basically nobody uses. Not that. It'd be a pair of glasses very similar to mine, or if you saw my CES coverage with slightly wider frames, they actually look pretty cool if I do say so myself. I look rather studly in the ones that I've tried on. But it's these larger frame glasses, but they have a display. The ones I saw were mainly just had some speakers embedded in them and like a voice assistant. This would actually have a screen that you could actually see on the lens. I think that's the future. Nobody has really perfected that. The first company that does that probably has a relatively killer product, at least in the shorter term. So they tried to connect this to your phone. This is all rumor. Okay, none of this is fact in what I'm telling you, but typically these rumors have some fact based in them. Apple was trying to tether these glasses to your phone, but they were finding it wasn't working. So they tried to work on ones that were connected to your Macintosh. Apple executives felt that it did not perform well, and they basically shelved this. I tell you what, guys, this is why I put out a video yesterday with Tim Cook's face on it and said maybe we should fire them. Because do you think Steve Jobs, rest in peace, Mr. Jobs, and his family and all that stuff, we're thinking of them. This is not like trying to reinvent the man or anything like that. But do you think Steve Jobs would let Apple employees come up with a design, fail on the phone, then fail with Mac, and then shelve the product? No, Steve Jobs would look at these guys and say, go get it done. And so I think that's what's missing with Tim Cook. He's too soft. They try too many things. They fail, and he lets them fail. He let him fail with the car project. The Vision Pro was basically kind of a half-baked product that failed. They failed on other things. They failed to even update the phones and make them any different over the past 5 years. They failed with a trifold design. This company is just failing, okay, on anything new that they try to do. Now, I say this as an iPhone user, MacBook. I've got the speakers in my living room. These are all fantastic products, but I would like to see them come out with something innovative because I think the company is capable of doing that. Now, X is on fire, baby. Rolling out X money. I don't think we'll have to talk about that. I did a short form video on this channel, so you already know about that. But Amazon and potentially Apple upping their spend on X, as I think they're seeing the usage over there get a little bit better. And there's a quote free speech kind of movement where if Instagram allows you to say whatever you want. Well, then now you can be on X and be a little more comfortable with that from an advertising perspective. Moving on to Amazon. Start of the week at 228. On a week where there wasn't a lot of news as they're prepping for their earnings, a little bit of a quiet period for Amazon, up just not up just 4%, but we were up 4% on Amazon. Now, the company's Q4 earnings are expected next week. Revenue expected at $187 billion. This time next year, we're expecting $200 billion. Guys, this is not for a full year. This is in a quarter, okay? That'd be about 10% growth year over year. And when you've got this big, massive number, and so this is what gets me excited about Amazon. We continue to see efficiencies over there. What has me excited about Andy Jassy is when he took over the role. I didn't know the guy, okay? I don't think many people did, unless you're really paying attention to stuff over at Amazon. I didn't know him, but what we've come to find out about Andy Jassy is that he certainly is no Jeff Bezos, but what he's better at than Bezos is finding out a way to profit off of this 187. The expectations in the quarters for 48% growth on the EPS up to $1.49 a share. And usually the companies come over that. The high end estimate is for $1.83. We'll see where Amazon comes in, but that's very exciting. Those earnings will be exciting to see. Now, not exciting for Amazon is potentially tariffs. And those appear, we had early threats from Trump, but those appear to, again, these are still threats. I think he's still trying to get something out of Canada, Mexico, and China. And if he gets what he wants, then he'll put these off or he'll put a 90-day delay on them or whatever. But no, he's pushing forward. I think these were 25% tariffs in Canada and Mexico and a 10% tariff on China. This is I think across the board. And so this does impact a large swath of products. My guess is there'll be certain products where this won't apply to, maybe right away. There also, when I've been listening to conference calls, there has been a front running a little bit of supply chains that rely on these countries and certainly China, where you have a pull forward of buying of inventory. So this won't necessarily have an immediate impact, but it will have an impact on Amazon a little bit, Amazon sellers, because as an Amazon seller, the way it's set up is they require you to keep very tight inventory. They don't let you stack up 2 years of inventory in the Amazon warehouses. And as a business, you probably don't want to do that. And so you're constantly reordering here with Amazon. And so we'll see how this impacts things. We'll see if it's just a pump fake and then a walk back by Trump. Who knows? Who knows? But this will be interesting to see if this comes down the pike. Moving on to Netflix. Start of the week at 971, roughly flat on the streaming giant, up about 0.5%. Finish the week at 976. We've got TV viewage that is climbing by about 4%. What was interesting was Disney Plus continues to lead in market share. They obviously got those big networks, and you had big NFL kind of playoff games and those types of things. But Netflix results were last week, and they were just absolutely incredible. Moving on to the stock of the week. Didn't report earnings. In fact, I think we're still a month away from earnings, or about 3 weeks away from hearing from Nvidia. And so it might be a bumpy ride until then. It was definitely a bumpy ride this week. His share started at 125, got all the way down into the 1-teens. Pat yourself on the back if you got that one, and then got out back in the 120s. I didn't, but I did buy this one again, added to an existing position down into the 1-teens. Finished the week down by about 4.7%. At 120. Obviously, the big news of the week was DeepSeek. That was just taking over the airways. Couple of things about DeepSeek, guys, is the very first video that I put out about DeepSeek was on, I think this was on Saturday. And at this time, everybody's mind was blown. Social media, all you could see on DeepSeek. Now, if you've got, pictures of pretty girls and stuff like that in your algorithm, maybe that's what you're seeing. But I'm all tech news, all AI. All I saw was DeepSeek all weekend long. The algorithms were picking it up. Influencers that like to ride the algorithm trends, they were on there picking up. Basically, you had no dissenting voices that were on there. I also think you had a coordinated effort from China, because I noticed a ridiculous number of very similar toned, similar worded comments on all of my videos, anything that I posted about DeepSeek. And I also saw this from other creators as well here on YouTube. Anybody that had content about DeepSeek questioning its being real, questioning the data that I'll show you here in a second that was a fact, you got all this blowback. And so this was very coordinated. The Chinese, through TikTok and other types of things, they have realized that they know how to manipulate most Americans through social media. They know that it's all about engagement. It's not about following anymore. It's not about having 5 million followers or whatever it is and being able to have reach that way. Now anybody can get reach if they know how to kind of engagement farm. And then they also know once a subject takes off on a site like X or YouTube, then you can just continue to amplify that. On top of that, you have 99% of Americans are absolutely brain dead. They'll read a headline and think it's true and then swipe to the next story. And they'll have it in their mind that DeepSeek is all of a sudden going to take over AI, and it's over for OpenAI. It's over for Nvidia. I mean, I can't tell you how many people thought, oh, it's over for Nvidia. You're not even going to need the chips anymore. But if you've watched my video on Saturday, I tell you that's absolutely utter nonsense, because back in November, DeepSeek actually made news back in November. Now, it didn't catch the algorithms. It didn't catch mainstream media. And so nobody really paid attention to this, but I did. I know this guy, Dylan Patel, very widely sourced person. You'll also see David Sachs cite his research again a week later, but I already knew Dylan Patel did the research. This was back in November. He said that DeepSeek is pretending that they have a smaller cluster of GPUs than they do. For whatever reason, some people think they were short the markets and this was a way to implement it. Some people just think it's a Chinese pride thing, whatever. I don't really care what it is, but the fact is DeepSeek was absolute bull crap from moment one, second one, but the algorithms convinced many of you that it wasn't. Then I came here on Monday on an article that went viral on Substack and basically outlined the entire thing for you. Outlined the research that we knew in November, outlined all of the stuff, all of the facts. This is the type of stuff that you expect when you get research about the stock market. If you're getting your research about stock market from headlines, from communication majors, I literally saw communication majors that were writing about foreign policy start writing about DeepSeek. Okay. You can't do that, especially when it comes to money. And then finally, David Sachs, very respectable person within tech. I think he has a position inside of the Trump administration as well. He confirms what you already knew and insiders in the community already knew a week prior, was that DeepSeek spent over $1 billion, $1 billion on its computer cluster. And it's probably a number, according to my sources, outside of Dylan Patel is one of them, but other sources that I have, that it's far greater than this. This was a manipulation effort by the Chinese, by this company, by state-sponsored entities to do whatever objective that they have. They might have more than one objective. But this $6 million like training thing, this was all bullcrap from the beginning. And that's not to say that DeepSeek didn't usher in some efficiencies that will be applied later. But what we did also find, and I don't see a lot of people talking about this, I addressed it inside of my newsletter, was the fact that DeepSeek actually had to shut their access to their website down because they don't have enough Nvidia chips. The number one thing you need Nvidia chips is not to train and not to get these models to a launch. It's actually to run the model. And as you're asking it to make you a thumbnail, as you're asking it to write you an essay, as you're asking it question, that requires a tremendous amount of computing power. So the more popular these apps get, whether it's a Chinese app, American app, and the point I also made in our newsletter was that China was always going to create their own AI. That was always going to happen for obvious reasons. We don't need to get into that. Just like they have their own e-commerce. Temu exists. Alibaba exists. It doesn't mean that Amazon loses in that case. And the same thing is true here. Just because they're going to have their own AI doesn't mean that OpenAI is crushed, and so is Nvidia. If you had your head screwed on this week, you could have made a lot of money and you could have been sitting here this weekend with a lot bigger account. And that certainly happened to the subscribers that took our word for what we are now knowing as fact a week later. Now, Nvidia's CEO also reportedly met with Trump in the White House today. I'll tell you what, that meeting probably went relatively well. Jensen Huang is one of the best speakers in all of executive worlds, and he and Trump together, he probably did his massive sales pitch on Trump. My guess is the topic of China came up, and we'll see. This will be interesting because Trump's an action guy. Okay. Trump, I think we could all agree, probably understands the sanctions a little bit on semiconductors, but unlike President Biden, Trump's probably willing to cut a deal with the Chinese there. And it'll be interesting to see in the coming weeks, because that's really what we're waiting for as investors. Does Trump close off the market for Nvidia chips into China even more? Or does he come to some kind of deal and then he opens it up? If he opens it up, Nvidia stock probably would go to $200 pretty quick. Moving on to Google, start of the week at 194, up about, up 5% to 204. Some minute details about DeepSeek and Google. Doesn't impact Google maybe directly, but Google does have a Gemini model. I think it's called Gemini Lite or Gemini Fast. I'm sorry, I don't know the product name right off my top of my head. But what many people were finding when they investigated thing was that model was actually cheaper to run than DeepSeek. Everybody was like, oh, DeepSeek's so cheap to run. You just stack your 5 Mac minis up and, run it locally. 99% of the people in the world will never do that. So if you run this thing off kind of a tokenization API, it actually found that Google's model was not only better, but it was actually cheaper. So Google coming out ahead here. Google's got their earnings next week. We saw Meta grow, I think, 20%. Google's expected to grow about 12%, obviously much larger base of revenue, to about $97 billion. I would guess they're going to come over this because Meta's results were so strong. Now, the company is appealing a $4.5 billion EU fine. It argues that their punishment for innovation. I think the big loser this week was Europe, because we see massive innovation as it comes to AI here in the United States, massive innovation and efficiencies coming out of China. What is coming out of Europe? I know they don't have a ton of great tech companies, but what they're doing is they're penalizing the great tech companies out there. So what is Europe going to be left with? I think that's a discussion for another time. Moving on to Microsoft. Start of the week at 428, dipped much lower after reporting earnings, down by about 3% this week, finished the week at 415. The company announced their earnings. Again, earnings video. People were offended by the thumbnail that I chose on that video. Guys, if you're offended by a thumbnail that somebody puts on YouTube, you got your priorities in the wrong case. Got your priorities in the wrong area. If somebody puts out a great thumbnail but tells you how not to make money, then that should make you much more upset. Thumbnail guy over here at Investor Channel Equity Empire is absolutely crushing it. The thumbnails are only going to get better and more clickbaity. You can absolutely guarantee that. If you post content on YouTube, guys, you want people to click it and watch it. That's the game. $69 billion in revenue. We won't get deep into it, but things were good because you can watch the video on Microsoft. Now, Trump says Microsoft. This is great. I love this. Microsoft would have never leaked this themselves, but because Trump literally has no filter, he unloads on this thing. So this is why Trump, love him or hate him, man, he gives us a lot of information that we wouldn't have got through otherwise. Would you see Joe Biden kind of leaking this information? No. I mean, the guy could not even string a sentence together, but at least with Trump, we get this. So Trump said that he would say yes, that Microsoft is in the deal to get TikTok. Now, here's the deal with TikTok is, first of all, it's the price. And through the comment sections of my video, there were some of you that didn't even know TikTok was for sale, which shows me that, man, you didn't know that this was actually a passed law, that TikTok was forced to be sale. Now, this is just the United States business. We're not talking about all of TikTok across globally. This is just the United States business. Also, what Trump wants, which is interesting, is that he wants the United States to have this be a state-owned entity of the United States. So the United States is going to own 50% of TikTok US, and another company or a contortion of companies, maybe Oracle and Microsoft, Oracle and somebody else. I remember when this first went off, Oracle and Walmart were actually partnering to potentially buy TikTok. Maybe Elon Musk comes in here. I don't really know, but that reduces the price tag a lot. If the United States is going to own a chunk and then another tech company is going to own 50%, and we're just talking about the US business, we are probably only talking about tens of billions of dollars. And that really opens the door up for who is able to buy this. So we'll see what happens. I am almost certain that Trump will force a sale here. He gave TikTok a little bit more time, but when push comes to shove, I think he's going to force a deal there. Now, I think this is one of the most interesting tweets is Sam Altman and Satya Nadella with like eating grins. I try not to cuss here because I know I've got students that watch this. And so I try not to, try to keep the bad language out here. But the eating grins here, what they just said to each other, or what they just did, I don't know what's going on here. But Sam Altman saying the next phase of Microsoft and OpenAI partnership is going to be much better than anyone is ready for. So we'll see what happens here. But those two met and more coming. Now, the company, I'm talking about OpenAI here, looking to raise fund to value at the company at $340 billion. This was a report that they were launching a new model. I got confirmation before I started recording the video. I didn't bring it up here, but they just released a new model. Sounds to me it's like a half-baked model. It's a mini model. It is available for free. And it's just in order to keep up with competition that you are seeing from DeepSeek. I don't want to minimize what DeepSeek did. DeepSeek is a good model. It innovated on some stuff. It is open source. I think people confused some of the content that I posted from that, but a lot of it was just Chinese bots or Chinese propaganda. What I do want to emphasize is they lied. They lied about their cluster. Their cluster of GPUs was a lot bigger than the $6 or $5 million number that was being floated around, not just by the company, but by everybody on social media. And then the headlines and the stupid news media ran with that. That is a bold-faced lie. We knew that this week. We knew it back in November. If you had your head screwed on, you knew that was all BS. And so we'll see what happens. They innovated there. And not only that, they're pushing companies like OpenAI, which are still at the forefront of this stuff. You should expect new models from Google very soon. Grok, all of them will continue to usher these out. Moving on to Tesla. Start of the week at 400. Basically flat. We had some ups and downs with Tesla, but finished the week up 1% higher to 404. We'll show it to you technically, but this company is having, trouble getting above that 400, 420 level. Now, company reported earnings, recorded a video of this one. It got posted late, so some of you might not have saw it, or it might not have get recommended to you because I had to post it late. A serious YouTuber would have sent this out when the audience is on YouTube. I don't care. I just record these things. I put them out. They missed expectations. They only grew revenue by 2%, but you had big promises from Elon Musk. He's saying they got epic long-term potential. That's always, the thing with Tesla. You got this potential. You got full self-driving coming later this year in Austin. That could be interesting, potentially out here in California. Robo-taxis, maybe even the Optimus robot, which I'll show you here in a moment. Now, what kind of growth, what kind of revenue is this going to generate? Will it be enough to feed expectations from investors? That'll be interesting. But oftentimes talking about the Optimus, I think Elon Musk said this was a $10 trillion potential product. He does have a competitor in the market. It's this Figure company. They have a customer already with BMW using this in their factories. Not exactly sure how BMW is using it. I don't think that information is 100% public. But what's interesting is this company Figure, which is making this robot that you see here, they signed their second commercial customer, and they say, he uses a key word here, potential for shipping 100,000 humanoid robots. He doesn't give over a time frame. Is this the max amount that they want? Also with Figure, what's interesting is this company is still a startup. I think they're backed by Bezos. Nvidia has an investment here as well. This is definitely what I would say the leading humanoid robot on the private side. What they probably don't have, and what Tesla still has an advantage here, is all the manufacturing that Tesla has proven that they are able to do. I see people in my comments complain about, well, Elon Musk said he was going to do this in 4 years and it took him 6. Well, he still ended up doing it. Okay. And he's proven time and time again that he misquotes his timelines. But what the nuance to that, what a lot of you guys don't understand about Elon Musk is when he gives a timeline and he gives it to Wall Street, he's not giving it to you, the investor. He doesn't care about you. He doesn't care about your timeline. Who he cares about with the aggressive timelines is his employees. And this is like a time-tested strategy by high level leadership. is if you think it's going to take your team 2 years to do something, you tell them to do it in 12 months. If you think it's going to take a month for your team to do something, you promise it in a week. And so every time Elon Musk gives a timeline, he knows it's aggressive. He knows they're not going to make it. And that is why he is such an extraordinary person to invest in. Because if you're going to invest in somebody, guys, do you want them to lead your employees? Because when you invest in Tesla, these are your employees. This is your company. Would you like a leader to be like, okay, if you can do it in 4 years, go ahead and do it in 4 years? Or would you like a leader to say, I know it's going to take these people 4 years to do this, but I'm going to make it do it in a year? Steve Jobs would do this. Okay. Every leadership book I've ever read, it describes this to a T. Okay. So you got to screw your head on a little bit more as an investor. A lot of you guys are still really confused. Okay. Now does that mean you invest in Tesla trading at like 1 million times forward its valuation, 132 times forward, growing at 2%? That's a whole separate discussion. But setting timelines that you know are aggressive, that you know you're going to miss, it's not for you. It's not for Wall Street. Elon Musk knows he's going to whiff on that. He's willing to do that. Most CEOs, guys, don't do that because they think they're going to get fired. They think about themselves rather than the company and where they're going. This is the next level stuff that you need to think about. If you're going to invest in individual stocks, this is the type of thinking that you need to do. If you're not doing this type of thinking, it's called call Fidelity, call a financial advisor, invest in ETFs, and let a money manager do it for you. Because if you can't do that type of critical thinking, you're not ready to invest in individual stocks. But I actually think most of you are ready for it, and I'm here to assist you along the way. That's me beating you down and then picking you up the floor. If you read great leadership books, folks, it's in there to a T. I'm not comparing myself to a great leader, but I've read all of the leadership books that they've read. I've read them all too. Now, waiting for pullbacks on the S&P. It's just sitting up here at the top of the range. We get more S&P 500 stocks reporting their earnings next week. Obviously, you're from Amazon, Google, and many, many, many others. You also get a mix of smaller cap and mid cap stocks reporting here relatively soon as well. Meta just blasted off the top, put up some big green candles. Should hit resistance. You're waiting for pullbacks, obviously, in Meta. Apple hitting the top of the range here. Got rejected, sitting here, pullbacks in this one. I mean, I'm like a broken record, okay? These stocks are in these mega uptrends. You're buying pullbacks. Amazon on a pullback, you're buying it. Netflix on a pullback, you're buying it. Nvidia, different situation, because what I'm trying to do with Nvidia is figure out where the next trend is, okay? So we have this longer term trend. In fact, I need to put Nvidia on a weekly time frame because we're so far and above. What I identify, most people, most traders, and when I say it's usually me taking a contortion of advice. This red line is actually the longer term trend in Nvidia. So if we get there in the short term, it's going down to $8. Now, $8 doesn't make any sense minus like an invasion in Taiwan and Nvidia basically ceasing operations or whatever. So $8 doesn't make sense to me in the shorter term. So where is this thing going to pull down in the shorter term, and where's your buying opportunities? You are on this breakneck trend. This is broken. So that's not the trend as well. You do have a shallower trend I'm seeing that's developing here. Whether or not this ends up being kind of the trend going forward, we'll have to see. I think you're still trading over and above an area. If you wanted to step on Nvidia this week, that was not the worst move. You should have some area of support right here at about 110. There's an area here at 110 and then at 100, or maybe like closer to 90 on this one. You wouldn't want to break through these levels. Now we're $20 increments lower. The key level here, I know it sounds weird, but 77. You break through 77, you're coming to 50 on this one. So key levels that we're monitoring with Nvidia, is this kind of a rolling over? Is it sideways consolidation? You don't get earnings on this one until the 26th. Although next week you should hear from AMD, which not direct parallel to Nvidia, but could move it one way or another. Google's just made a new higher high. So you know what to do on that. And Microsoft actually retested an area where I have been buying. I didn't add this one, thought about it today. This was like the one mega cap stock of this group that I thought about adding today. but it's over. I had these green box on here, and I'm a simple man, guys. When the stock hits a green box, I buy it. We haven't hit it. This gold trend line, the reason why I put a gold trend line, it's not a formal thing, but I like to put these in here as more of a temporary trend. But really the trend to look at here, we can clean this up quite a bit if we wanted to, is it's this purple line with Microsoft. This is the longer term trend, and you are walking your way into that. And so that's a good buying opportunity. And finally, Tesla. You'll see here, Tesla is having trouble get through this 404. I mean, it's a first world problem when you're trading at, you know, $1 trillion valuation, 120 times, growing at 2%. First world problem that you can't get through the 400, 420 level with Tesla. There's just not enough incremental buyers at this level, but there's not incremental sellers as well. So pullbacks on Tesla, this one's in a pretty well-defined uptrend. It's not as long as the rest of these, but it's been intact since April. Folks, that was the FAANG Stock Recap Show for the end of the month, Friday, January 31st. I hope you all have a great weekend. Be sure to join us over on the Equity Empire channel. I'll be posting a video. I'm hoping to do it tomorrow since it's going to be a longer video where we have earnings from CLS, KLA. There's just a ton of earnings. Now, we can't go super in depth on all of them, but we'll cover as many as we possibly can. We'll obviously talk about DeepSeek. We'll talk about all that stuff. But again, last week, I blueprinted this thing out for you. Okay, if I was wrong, I would tell you. But we literally told you everything that David Sachs told you in a tweet, 7 days before he told you. So, David, you need somebody on your team. You need an analyst. You can call me and, wouldn't cost that much. Hopefully, guys have a great weekend. Be safe out there, and we'll see you again next week. Good luck with your investments.